Let's welcome on board right now the management. We have Satyanarayana Chava, the founder and CEO at Laurus Labs, joining in on the show right now. Mr. Chava, thanks so much for taking the time out. Good morning, firstly. Good to have you on the show. It's been a blockbuster quarter for you, and it seems that API sales have done wonders for you this time around.
Good morning. The quarter one performance is a testimony to our belief having capacity in place, regulatory track record, and then confidence in our customers. That led us to a fantastic growth. And we also experienced almost 4% improvement in our gross margins. That was primarily because of product mix, efficiency improvements in process, purchase efficiencies. All these led to improvement in gross margin. While we also did very well in Ebitda because our finance cost, depreciation, and R&D expenditure were almost flat. Because of these opportunities, we performed very well in the top line, Ebitda, PBT, and PAT.
Yeah, absolutely. I'm just wondering whether these EBITDA margin levels, sir, will sustain going forward or not. I mean, on an EBITDA basis itself, you've clocked about 29% versus a comparable of 16% on a year-on-year basis. That's indeed a huge jump. What kind of guidance can you give to our viewers and your shareholders in terms of what sort of margins will you be able to clock in the future going forward?
If you look at our EBITDA margins in the last 5 quarters, it moved from 16% to 23% last quarter, Q4 last financial year. And the Q1 current financial year, we did 29%. Regarding sustainability of these margins and EBITDA percentages, we have the ability to maintain, sustain these levels because we have invested heavily into infrastructure starting from 2017, both in APIs and formulations. We are utilizing the capacity what we have created earlier, and we have the abilities to maintain these kind of numbers, and we will put our best efforts.
Wanted to understand if you could just break up your revenue in terms of how the oncology sales have been, how other API sales have been, and how ARV API sales have been, and which segment do you actually see leading going forward? Where is going to be the maximum growth contribution going to come in from?
Our FDF division is performing well because of low base from 100 crore in the Q1 FY20 to almost 352 crore in Q1 FY21. That was a significant jump. APIs also, we saw a lot of rebound, especially in ARV APIs, led by 2 products, tenofovir and dolutegravir, where we started selling more quantities than previous quarters. Custom synthesis also did very well. It also has a low base, but we have a lot of opportunities in custom synthesis. So primarily, the growth is led by formulations, rebound of ARV APIs, and increase in custom synthesis. Oncology, we have the largest capacity in India, but that segment is 250 crores around. We don't expect that oncology segment will be doubled in the next 2-3 years. We will have a significant growth, but that is not going to be a growth driver in the coming quarters.
Sure. Also wanted to understand, as I see on my screens right now, your stock is already at a life high right now. It's given returns of 130% in just the last 1 year. If you could use this platform to really hand out a message to your shareholders and people who are looking to buy afresh into the stock, what's the message that you would like to give to them?
See, we always work towards stakeholder value creation. Stakeholders includes our colleagues, society, shareholders, and the country. So we people have to believe our conviction in increasing our capacity. Last year, at the same time, people were asking us why you are investing in capacity. And today, same people are asking why you haven't invested more in the capacity. So our conviction worked very well, and we have the same conviction even today. But what is also important, with these revenues, we haven't changed our mindset. Still we believe and we act like a startup. So there are a lot of opportunities ahead of us, and we will strive to achieve much higher numbers in the future.
Okay. So the outlook, of course, continues to look good. But let's talk about the strategy when it comes to the API side. I know you've touched upon it, but firstly, do you think there's an element of one-off stocking in the quarter, or do you actually see demand continuing? And with focus on API growth, do you see the number going up by about 35 to 40% over the next 5 to 7 years as global market share? I mean, what are the kind of numbers you'd put to that? And for investment in API as well, do you see further investment on that front to increase market share?
To clarify one thing, there are no one-off revenues and profitability in Q1. So that is very clear. The second, opportunities in API front are enormous. But at the same time, we have to be very cautious in choosing the product list. Our choice of products depends on whether we will get to leadership position or not. We have 7 products today where we enjoy at least 25% global market share. And we have another 3, around 15% global market share. We are also working on another more than 6 APIs where we can get to a leadership position in the next few years. So eventually in the next 3 to 4 year horizon, I'm very confident at least 15 products, APIs, company will have a leadership position, at least 25% or more market share globally.
You've also seen a fair amount of expansion, to US, Europe versus your peers. So do you see a low base and opportunity in post-COVID world as well, a further ramp up perhaps? And do you think spends on healthcare are also set to increase, particularly for Indian companies if we see in the overall context?
We are not operating in any acute segment. Majority, I think about 80% of our revenue comes from drugs for treating chronic ailments. So we don't see any opportunities because of COVID. The one-time opportunities because of COVID were not there in the numbers what we published. And we don't expect that kind of opportunities in the previous quarters also. So the growth is coming because of additional orders we're getting, and additional market share we're enjoying in the products what we have. And also contract manufacturing of both generic APIs and NCEs is also growing much beyond what we anticipated. And we're also expanding capacity. We're expanding our API capacities by 25% in the next 12 months. And we are increasing our formulation capacity by 80%. From 5 billion, what we have today, to close to 9-10 billion in the next 12 months. So a lot of capacity expansion is on the cards. Interestingly, most of the capacity expansion in formulations, we are doing it for non-ARV products. That means we are also diversifying our revenue base in formulations as well.
Okay, great. So what's the order book looking like for the formulations business for FY21?
We're not giving any forecast, but we can tell you we have a very good order book right now. Right now, our challenge is how much we will make rather than how many orders we get. So orders is not in front of us. Orders is behind us. How much we make and how we increase our capacity is the challenge and also opportunity in front of us.
Lot of countries now are following a concept of crawlback tax. Also, they are giving preference to companies which have local manufacturing. Do you think this is going to be a huge challenge for Indian pharma companies? Because if you don't set up local manufacturing bases because of crawlback tax or because of advantage given to local firms who've got a manufacturing capacity in those local countries, the environment could be very challenging.
Probably yes, but when it comes to our company, our dependence on US sales for APIs as well as formulations is not that significant. So even if it comes, we will have ability to overcome those kind of challenges.
Okay. If one works with an assumption that India's imports on API from China is going to reduce, which is great news for Laurus and for a lot of other companies like yours. But my understanding is that typically when a company has to change the total dossier, which talks about where the APIs and formulation drugs are originating from, the process could take 12 to 18 months. So 3 years out, this is great that India's dependence on China's import is going to reduce, but in the short term, it's going to have an impact on supply chain and disruption. Would you agree with this assessment?
You are absolutely right. Changing a starting material, changing an intermediate, changing an API has a different timelines. Starting material may take 6 months, intermediate may take 12 months, API may take anywhere between 18 to 24 months. For the sake of clarity, we don't buy any intermediates from China. We only buy starting materials. So we don't see any threat because of the change of intermediates or APIs. All our formulations are fully integrated. We make all APIs what we formulate. So imports of APIs or less imports of API has little or no bearing on our future.
Okay. Closing comments, APIs essentially follow a cycle, like commodity prices, they follow a cycle. Where do you think API stroke the API commodity, API pharma cycle is? Next couple of years after the pricing crunch, what we saw in major markets, is the natural price trend higher?
Prices are not going up. I can tell you very clearly. You can't take 1 or 2 examples where price jumps were significant. But if you look at in total, there is no significant increase in API prices. But what is happening? The strongest players are getting more market share. So the market is moving from weakest player to strongest player. That is happening. So big guys will have advantage to garner more market share than the small guys. That trend is happening. That is also helping us to get more market share in our leadership products.